What is bad credit? Bad credit, sometimes called adverse credit, refers to a poor credit record or history of repaying money owed. Perhaps someone has borrowed money for a mortgage, other loans or credit cards, but has struggled to repay their debts. Missed direct debit payments have an impact too. If someone is in credit to their energy or phone provider, for example, those missed payments will impact their credit history, and the longer they are missed, the greater the impact. There are a number of different causes for bad credit, including late payments, county court judgments, IVAs or defaults. But there is no set score that puts you into the adverse credit category. In fact, the scoring system changes depending on the credit agency. But if you have a poor or very poor score, lenders may put you in that category. Bad credit will be visible on your credit file for 6 years, so if you do miss a credit card payment, it will usually take up to 6 years for this to be removed from your credit report. To find out if you have bad credit, you'll need to check your credit history online. There are 3 main credit referencing agencies in the UK that are used and trusted by mortgage lenders. We've got Experian, Equifax and TransUnion. A useful service called Check My File collects your report from all 3 agencies to give the fullest overview of your credit history. The good news is it's usually possible to get a mortgage even with bad credit. The bad news is you'll probably pay a higher interest rate and you may need to save for a larger deposit. This is because lenders see you more of a risky borrower. Some mortgage lenders may also be reluctant to offer you the loan you need. Asking your nearest high street bank for a mortgage can be risky. If you apply for a mortgage and get rejected, this could then make it harder to get a loan later on. This is because too many hard searches on your credit report make lenders think you're desperate to borrow money. Whether you've missed a couple of payments here or there, or you've defaulted on several different debts, don't panic. It is possible to improve your credit score over time, and you can even get a mortgage. Speaking to a specialist mortgage broker is the best thing you can do to maximise your chances. They'll know the market like the back of their hand and will have a good idea which lenders are most likely to offer you a mortgage. Now, there are a few ways you can increase your mortgage affordability. Number 1, improve your credit score. If you have any outstanding debt, such as loans or large credit card balances, you should try to pay these off as much as you can before applying for a mortgage. Reducing the amount of debt you have tells the lenders that you have everything under control. It can make it much easier to pass their mortgage affordability checks since your monthly expenses will be lower. Number 2, put down a larger deposit. If you paid off your expensive debts and you've managed to stay on top of your payments for a while, try to increase your house deposit. This will help you get access to better interest rates, which will then make your monthly payments lower. A lifetime ISA is a great way to put your money aside. You can save up to £4,000 each year towards your first home. Now that's a tax year, while getting 25% bonus from the government. That's an extra £1,000 each tax year if you max out your account. Number 3, get help from your family. If you're struggling to save for a deposit yourself, all hope is not lost. You may be surprised at some of the options available to you to help increase your house fund. One option is a deposit boost. This involves a home-owning friend or family member releasing money from their property to top up your deposit, or to be used as your full house deposit. You could also explore guarantor mortgages, like an income boost, which involves adding a friend or family member to your mortgage application. That way, your total combined income will be larger, allowing you to borrow more. Your loved one will not need to contribute anything to the mortgage unless you miss a repayment, in which case they will be required to step in. If your family does have access to cash savings and would like to help, you could opt for a savings as security mortgage. They'll deposit 10% of the property's value into a special savings account held by the lender for a certain amount of time. Once the set period is over, as long as you've made your repayments each month, your loved ones will get their savings back, plus any accrued interest. If you have light adverse and want to see what mortgage schemes you could be eligible for, head to tembomoney.com. You can create a free plan in 10 minutes to find out what you qualify for and how much you could boost your buying budget by. Plus, there's no credit check involved. Talk to Tembo today.